Hello. Welcome to another video from 10x Investor Education. So, last week there has been a lot of selling of these penny stocks on small cap stocks, and I have been adding to these positions that I believe over a period of long term I can make a lot of money. So, this weekend I'm going to cover some of those stocks. So, I tweeted as soon as these results came last Friday and last Thursday, and some of these stocks really went up a lot. For example, last week when Big Five Sporting Goods came up their earnings, which I have been buying and tweeting about it previously, and that week Big Five went up by almost 60% in a week after the quarter results. So I also bought more stock after getting the quarter results. So it's important to know when they announce the quarter results as soon as know the direction of the stock, how the momentum is. So given big fight this week, I added a lot more portions in my small cap stocks. So one of them today, for example, is Atossa Therapeutics. Okay, the symbol is ATOS. This video is about ATOS, but I tweeted about 3 or 4 stocks I will show in a minute. Atossa went up by almost 20%, which is a penny stock around $2 and $2.40, $2.20 I have been adding for last couple of weeks. And then another stock is which is one of my favorite with a lot of momentum is Hyre, Hyre. It's a rental car play. I don't think there's too much competition in that area. And when the stock fell almost $7-8, I bought more, and I think the stock went up by almost 30 or 40% on Friday after the quarter results. So another stock is also known as BioLace. So they are into dental lasers market. So it's an interesting company with just $100 million market cap, and they have around $8.5 million revenue, which has been growing with a very huge high demand. So these are very risky stocks. Okay, so I swing trade these stocks because there's a lot of options premium in these stocks. So I buy them, I sell 30-40% options premium, around 50% at double the stock price, so that I reduce my risk. So I will show one of them is Atossa. So Atossa, I have been buying this. I created my first video on Atossa in January. It is around the same price. It went up in a lot and went down a lot. So I buy them on the dips and I sell them when they go up by 30-40% on covered calls, and I make money. The reasons is because, for example, if you take Atossa, they burn around $3 or $4 million a quarter, and they have $130 million in the bank, and they have good FDA approved medications and also good approved good clinical phase trials medications that are in progress. So that literally that company doesn't make any money, but the potential in the future with this what I believe good for this small cap biotech companies. So that is the reason I play with these stocks and these companies. So main thing I look into is they do have options. I get a good options premium. The risk of bankruptcy chance is very low. So those are the main things I look at it. And the main, obviously another thing I look at is I have to make sure the institutional buying in the stocks is really high. So if you look at Atossa, for example, Vanguard has 500,000 stocks holding in this company around 3 months back. Now they almost have it like 3 million stocks in this company, so which is almost 500% up. So not just Vanguard, after quarter results came, there are a lot of companies taken position in the stock. So this is the patterns I look for. So these stocks can go down by 30-40% on a bad news. So even all these parameters are good, the chance that the stocks go down a lot less and sell off, even after sell off, when this is the video I made around like in January. So the way I look at these small companies, I look at who is the founder and the CEO of the company. So for example, Dr. Steven Quay, the president of Atossa Therapeutics, He holds 87 US patents and has invented 7 FDA-approved pharmaceuticals, which have helped over 80 million people. So, and he has been president for a long time. And Dr. Quay received MD and PhD from University of Michigan. The most important thing is the founder needs to be reputable and is a well-known guy for the small cap companies. Otherwise, a lot of the small cap companies, they do not make any money, they do not get any FDA approvals, and they still keep surviving selling the stocks. So this is the stock I'm talking about. So Atossa Therapeutics. So as you can see here, the stock went up by almost 22% on last Friday. On last quarter results, as you can see here, the reason is potentially one is the earnings per share expected is estimate is 32 cents negative, and actually they much better with only 4 cents negative. So which means they burned lot less money in this quarter. So we'll go through some of the results, but in general I will go through a couple of things here. So this is not an advice to buy this stock at this price. This is purely for entertainment education purpose, and these stocks I have been buying, adding to position continuously on dips, and whenever they go up, I sell covered calls. So as you can see here, I have been actually tweeting. This is RK10X investing. I have been tweeting as soon as the quarter results came up. So I added more in Atossa when it is around $2.30 and 40 cents recently. So for example, Atossa 1 and higher, which is also one of my favorite growth story, which I think already went up by 30% on Friday. And I had several hundred stocks in this position. And also other one is BioLess, which is also really penny stock, literally. I like the way their growth going on, 70% revenue growth, and it is a very small $100 million company, and then they are making a decent, good amount of money. So if you look at Atossa, so this is when they announced results. As you can see here, a lot of green, which green means basically a lot of new hedge funds are buying the stocks. Last 2-3 days, as you can see here, almost nobody sold. And as you can see here, the Vanguard position is close to 3.2 million stock. And if you look at Vanguard position in the stock, so they had the position of like 500,000 stocks around end of February, and now they have close to 3.2 million stock. So the increase happened by 500%. It's just an example how the institutions are buying into the stock. So coming back, what analysts are thinking. So if you look at here, this is rated at 2, which is a buy, which is not a strong buy, rated buy. Basically, the small caps, not many analysts cover. So there are only 2 analysts covering. One is saying current price is $2.90. One analyst is saying $5, and another analyst is saying $7.75. So the average is around $6.38. So even though it might even not go into short term to $5, I think I'm expecting to go to $4 easily in next couple of months, because there are multiple factors that are coming for the stock price to go up, and that is the reason why I have been adding position into the stock. So as you can see here, let's go through before going here. So there are multiple ways. When I buy some of the stock, actually I sell covered calls. And if you look at here, this is January 2021, January 2022. As you can see here, almost on a $7 call strike, the stock price is less than $3 on a $7 stock strike, which is close to 125% upside in the stock price, and you can get almost $1.20, which means dollar between $1.95 and $1.20. I got it on Friday, which close to 40% of the options premium. So covered call options premium. So because these are really small caps, you'll get a lot of good premium. This especially has a lot of momentum. That is the reason why you get premium. So if you want too much risk, you can still get this covered call, sell covered calls at strike price of $7, which is almost 125% the current stock price, and get a 40% premium on the options. So that is how I trade some of these stocks. So let's get into what actually, so these are the main things. Okay, these are the main holdings they do. So they have basically COVID-19 treatments. So this, they are not into vaccine play, but basically they are into two drugs which are under phase 1 and phase 2 trials, and phase 2 trials has been pretty good results. So with a nasal spray, symptoms reducing a nasal spray. So basically it will relieve COVID-19 symptoms with this nasal spray. And other drug they are in clinical trials is known as ATH201. Both these programs known as HOPE, so which basically improve lung function. So these are the two drugs they are in clinical phase 1 and phase 2 trials. Obviously the main drug they are betting on is endoxifen, which is basically targeted towards both breast cancer and also ovarian cancer. These are the two drugs and for which they have multiple levels of FDA approvals in their clinical phase stages. So these are the main drugs for these companies. Okay, so if you look at here, not here, yep. So this is basically Atossa Therapeutics announces first quarter financial results, provided corporate update. So the key developments I would like to go through, which is, okay, so they concluded phase 2 clinical study for endoxifen, and they got positive results. It's not just conclusion, but also positive results. And also they announced the 24 months of expanded access single patient study of endoxifen for breast cancer, and they got FDA permission safe to proceed letter under expanded pathway, which is basically to ovarian cancer patient, and began treatment. So they're expanding this drugs for both ovarian cancer as well. So, and also they are talking about double-blinded randomized placebo-controlled clinical studies for 8301, which we talked about, which is nasal spray, and another one is 8201. So, and what they did was, and also the good news is, on top of beating the quarter results, they also have a good news is they had initial plan to increase the authorized shares by 325 million. They cancelled the plan, and I think they have plenty of cash right now. So if you look at here, you understand that they have 100, that they have pretty good cash, and the burn rate is almost close to, so cash is 137 million by end of March quarter, and their burn rate is only around 3.5 million. So this is what I look for. First of all, you need to get a good options premium, and also they need to have good cash in the bank, and they should not go to bankruptcy because this penny stocks is very common. And next one is they don't have any debt, and obviously next one is the burn rate is only 3.5 million. So they can go with this cash for years even without a secondary offering. And if they get any good news, basically I don't think any offering will be there, secondary offering, in next couple of weeks or months. So that is a good news for the stock price not to go down. So that is the reason, and there are multiple positive things happening in the next couple of months. So that is the reason why I'm optimistic on this company. So that is multiple reasons, as I said. That is the reason I added more portion to the stock. And one of the reasons is, as you can see here, multiple institutions have kept on buying into this company after quarter results and day before quarter results. So let me know what you think. As I said, the main reasons are actually all the trigger points, right? The quarter results is good, lot of institutional buying, and also a lot of options premium, good options premium, covered call premium I'm getting. So the risk that reduces a lot of risk on my portfolio on this stock. So what do you think about Atossa Therapeutics? Let me know. And if you feel free to watch my video on this one in January, during January on this company, I included more stocks during sell-off last week. Hopefully you like the video. Please click the like button, and see you on my next video. Thank you.